Well, prices, well, you see up today, remaining volatile, weakening demand, tighter supply. The latest. Joining us to discuss is Citi's global head of commodities research, Ed Morse. Ed, always good to check in with you, which we've been doing somewhat regularly. What are the latest things people should be aware of when it comes to the markets that you follow? Obviously, the key one being oil around the world.
I think two of the interesting things that are happening this week, even with the price bumping around as it has been, is that time spreads are coming in, particularly on WTI. That is the backwardation in the market, or the signal that the market is very tight, are now showing signs of looseness. And this is something to watch. The cracks or the profitability of making gasoline and diesel are also coming in, another sign that we may see some loosening up in the market. And of course, what this is reflecting in a way is where the summer has been to date when it comes to driving season. We're seeing virtually no driving season in the U.S., at least when it comes to data for gasoline demand. Gasoline demand is way down, a function of some combination of high prices and an economic slowdown that must be at work.
So interesting. So we've had that demand destruction that we all talked about was a possibility, I guess. I mean, what are your expectations from here?
Well, we think we're going to continue with that because the economy is showing signs of weakness. It's intriguing on the demand. Our gasoline demand and our diesel demand is lower than any year going back, other than, of course, the 2020 pandemic year, going back 10 years, 2012, 2013. And year on year, it's down for the last 3 weeks, about 1 million barrels a day. That's a sign that nobody really was anticipating. And it's a combination, I think, of where high prices are. It's also an indication that inflation might be coming down. We're seeing signs of that on the major grains as well. Wheat, soybeans, corn are all slowly going down. Gasoline prices have been down for like a month straight. So that's good for the consumer in the longer run for sure.
Ed, I know you moonlight also as a part-time meteorologist, or you have to for your job. What's the impact of the hot weather across the globe, as well as the potential for hurricane season, which is quickly approaching?
Well, here you really are going into where we have to go, because while we are seeing a slowdown in demand, we're seeing horrendous weather conditions. We're seeing the hottest weather in the Northern Hemisphere ever. That includes China and North America, as we well know, wherever we're sitting in North America, and in Europe. And look at London with 38 degrees centigrade weather. We're seeing a hot, dry weather that is bringing electricity prices up everywhere in the world you can look. We're seeing blackouts everywhere in the world you can look. And these are not going to end anytime soon, given the expectations for hot weather, particularly west of the Mississippi, for the remainder of the summer. But then, as you mentioned, there's a hurricane season, and it's the real wild card on the pricing side. We normally don't have the third named storm until August 3rd. We had the third named storm in the month of June. We've had the 9th named storm already. So we've been kind of relatively free in the Caribbean, in the Gulf Coast of the U.S., and the East Coast of the U.S. so far. But with a prediction of 24 named storms, 3 to 6 Category 3 or higher hurricanes in the forecast, we have to watch out, because this could bring down U.S. production in the Gulf of Mexico. It could bring down the refining system in the U.S. Gulf. So it is the wild card that we have to look at.